I am joined from our Washington Bureau by Michael Linden, Director for Tax and Budget Policy at the Center for American Progress, a Washington think tank. Mr. Linden, welcome to Bottom Line. Thanks for coming on today.
Thanks for inviting me.
Sir, the president warned that if Congress doesn't act, the economy will take a hit. What are the economic implications of a deal to extend the payroll tax cut and additional unemployment insurance doesn't get done?
I mean, the implications would be pretty devastating. We're talking about a $1,000 tax increase on average for most working families, some a little bit more, some a little bit less, but that's hundreds of billions of dollars in consumer spending, essentially, that would be sucked out of the economy at a time when we really demand for goods and services is already well below where it should be. So that's really a bad idea. And then the unemployment insurance is a similar case. These are people who've been out of work for a long time, pounding the pavement, trying to find jobs, and pretty much the only thing keeping them afloat are those uninsurance benefits. You take those away, and again, demand for goods and services takes a huge hit. So it would be very, very damaging, and most economists agree that that would really be a pretty damaging act if Congress didn't extend those two provisions.
Let's talk a little bit more about consumer spending. You just mentioned it. It accounts for about 70% of the U.S. economy. Talk to me about the nuts and bolts impact on that if consumers actually are not going out and flexing their purchasing power.
Right. I mean, basically, we know from surveys and all sorts of other data that the biggest thing holding back the economy right now is a lack of demand for goods and services. Businesses aren't hiring because they're not sure when the next customer is going to walk through the door. Now, imagine if you just take $1,000 out of every middle-class family's purse and say, sorry, you don't have that this year, or if you take several $100s a week off of every unemployed person's, out of their budget, that's going to have a serious impact on those customers, whether they can walk through the door, whether they can plunk down their money for goods and services. So it's really distressing to think that we could actually end up without extending those two provisions.
Mr. Linden, the fiercest point of contention, as you're no doubt aware, between the Democrats and Republicans is whether the cost of the payroll tax cut package should be covered by spending cuts or by new revenue from taxes on high earners. There has been word as early as last night that Democrats were abandoning their demand for a surtax on millionaires. Can a deal get done through spending cuts alone?
You know, a deal with spending cuts alone is not ideal. Depending on how the spending cuts are structured, that can do as much damage to the economy as not extending the payroll tax cut.
How so?
It depends on the situation, right? So if you imagine if you cut spending that goes to those same middle-class families, in the form of all sorts of benefits or services that they consume over the course of the year, then they're going to have to cut back in other ways just the same as if they didn't get the tax cut. Now, it depends on how the spending cuts are structured, but Republicans have proposed, for example, raising premiums for Medicare for a lot of middle-class seniors, and that's going to be counterproductive because those seniors, that just means that's just less money. That's essentially a tax increase for middle-class seniors. So I think that's the wrong way to go, but I think the fundamental point of agreement is that they need to extend the payroll tax cut and UI.
Yeah, but are there any suggestions from the Deficit Reduction Super Committee that might be used to cover the cost of the bill?
Well, as you know, the Super Committee was unable to come to much agreement on anything, really. So I'm not sure that's going to be a good source for ideas. The truth is, we really actually don't need to cover the cost of the payroll tax cut or the UI extension. We didn't pay for it last year.
Yeah, Senator Durbin said the same thing today too.
Yeah, I mean, economic conditions haven't changed so much, haven't improved so much from last December that we suddenly need to pay for it. I agree that ideally we would pay for it in a way that is the most economically beneficial, and I happen to think that is by increasing taxes on very high-income individuals, because that's the least likely to damage the economy over the long run. But if they can't agree on that, then the more important thing is to extend those provisions, whether they're paid for or not.
Will a deal get done, or can we expect a continuing resolution so the government's funded at least on a short-term basis and the government doesn't get shut down this weekend?
Well, I think this is now our third or maybe even fourth shutdown fight over the past year, which I think is a record high. Now, we've managed to avoid those shutdowns in the past, so I guess history would suggest we'll avoid it this time, but really there's got to be some change in the way Congress does business, because letting these things go down to the wire cannot be good for confidence, for consumers, for businesses. It's just not a good way to run the government.
Michael Linden, Director for Tax and Budget Policy at the Center for American Progress, joining us from our bureau in Washington. Mr. Linden, it's been a pleasure. Thanks so much for joining us today.
Thank you.